Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, June 12th, 2020. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. I'll drop the PivotBoss Advanced ADR indicator down to a 1-period average right now, and what you'll see is that the previous session had a significant day against the average, over 300% of average daily range, a huge day down. But one thing here that you see on the chart is that price held the top of the prior range. That was the zone that we mentioned could be an area that even if we dropped as deep as that zone, it could still become a buying opportunity for a shot at new highs into 3,400. So again, this major snapback day here could be a buying opportunity the way it's playing out already today. It depends on how we close. Already, price is higher off the overnight lows and higher off the previous session's low and close. This is what we call the fade after stop run day, or fade after trend day, where price has elongated to one side. The next day tends to be a fade back toward the midpoint of the selling pressure day there. So we could be looking at a bounce all the way back up toward the previous session's mid. Right now, that would be a 30.92 level. Additionally, if price closes above the open today, as it currently looks like it's trying to do, that would also become a bullish extreme reversal. So for those of you familiar with my book, Secrets of a Pivot Boss, you know that this in chapter 2 is called the extreme reversal. After a big snapback, there tends to be a snapback in the direction from where it came. And again, with this 31.96.5 FOMC key level above, one of the key level plays that we like to play is the snapback to that level after the initial impulse move. Very similar to what happened on April 29th when we had the initial sell-off. We snapped back to it. Then we saw another sell-off and snapped back to that level. That could be what happens here. So we could be looking at a move as high as 31.96.5 over the course of the next day to two. And again, once you get a day where ADR is so significant compared to average, again 300% of average, we hadn't seen that type of day since we saw the selling pressure and since we saw the change of bias here. So when you see that type of day, you tend to see more of those types of days that follow. So today could be another high range day with an upward bias, and we could see more of those types of days that follow in the next 1 to 2 weeks. So keep that in mind. All right, let's take a look here at the NQ. Let's bring up the NQ here. What you'll notice with the NQ is we also had a significant pullback as well. This one also pulled back right to the zone where bulls would need to defend if this thing were going to continue higher, which is right at the previous month's high, top of this range as it's continued higher. You see the breakout here, the pullback right to that zone. Again, this is also inside the PIMA trigger zone here, which has been very bullish. So you can see this uptrending zone right there. Every pullback into the bullish PIMA trigger zone has been a buying opportunity. After 1, 2, 3 attempts, you're pretty safe. Once you start getting to the 4th rotation, the 5th rotation, at some point you may see broader failure. But until that failure occurs, you still continue to watch for those signs. This one actually shows a rejection of the previous high. That's the previous all-time high earlier this year. Price dropped back below that zone and is holding it. So overall, if price can't really get back above 9,800 and hold for long, then we may be looking at a higher high failure of this high, and that theoretically could lead us all the way back to value and the prior March lows. But again, the high probability target would be somewhere in the middle of that zone in about 8,500 here. So when you drop back down toward the 200-day, that would be about halfway or a little bit less than halfway the move. That would be the high probability zone to shoot for. But if that zone breaks, again, theoretically speaking, we drop all the way back toward value down below. So again, that's going to be the early level to watch here. Is going to be about 98 to 98.50. Perhaps the 10,000 round number here. But again, the early idea is that bulls are looking to defend this pullback, and if they can close it above the open today, we may see another attempt at retesting the FOMC key level at 10,054.75. Okay, let's take a look now at crude oil. There it is. Now with crude oil, this one also saw selling pressure in the previous session and is already now showing rejection off of the previous session's low price. So again, that's very important that once you see a significant sell-off here, a snapback typically occurs after a rejection at the previous low. So price traded below the previous low, eventually rejected down there on a lower low failure, was able to form a higher low and bounce back above it, is now reclaiming the previous session's close price. And again, this is all happening inside the bullish PIMA trigger zone. So that is a buying opportunity again for a shot at pushing through 40 and getting toward the upper 200-day moving average, which is around 44s, 45, 46. So it's up there in that zone right there. But again, we were looking for a 40 to 42 target before. We got 40, 42 half, 40 in that zone could be an easy next target here for the next upside move, with 46 right around the corner. Again, we can quantify the 3 to 4 day range here and see what we get. And we can also use our ADR targets. Remember, our ADR targets for the month, the PivotBoss ADR targets use the monthly low and project higher average monthly range over the last 10 months. Here's a 75% of averages here. This is 100%. So we have a zone between 44 and 47 that could be reached over the course of the next 1 to 2 weeks here as the end of the month comes to a close. So this could be looking very, very bullish here depending on how this plays out. Again, if price can continue to hold, call it 35.60, 35.40, the previous low, somewhere in that zone. 36 is especially, that right there could lead to a nice bounce and new highs ahead. Okay, lastly, taking a look here at gold futures. What you'll notice with gold is that this one also has rallied recently after a sell-off the previous day. So the previous day it did pull back, bouncing already. We likely have a one more move up toward the 1765 to 1775 zone, and then it's a decision point. Do we see further expansion, or do we come down here and break down and see a bit of a distribution in a markdown phase that follows? So right now this market is held pretty firm. Every single shot that it's tried to get below the 1670 level just has been met with opposing and even stronger buying pressure. It's kept prices in the range. Again, we're really just waiting until 1670 breaks or 1775 breaks. One way or the other we're going to go. Until that happens, we've got to continue to fade edges. And right now we have a little bit higher to get to the upper edge here. We'll see if that can happen above 1760. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Happy Friday, everyone. Please be sure to like, share, and subscribe. Take care, and I will see you in the trading room.